Hi, TradingView. Right, today I'm going to do a technical workthrough of Lucid Group, which is a technical buy here, I'd suggest. And I'm doing this by video. I do this in the group all the time, videos showing the technical work and that, explain to you step by step what I'm doing. When you look at posts and it's all written there, then you might not get the full picture of the technical reasoning behind the work and that. But anyway, Lucid is a major hype stock. It's one of these electric vehicle companies. Everyone is looking for the next Tesla. It had this enormous pump to begin with. Yeah, 500% pump, and also had this strong recovery. But this is quite common with these high risk markets. Is what happens is you get major pump action, but this is technically what I would call a regressive bounce. In that, what it does is it sets the tone for the downtrend. So you get an enormous pump, um, and it brings in the crowd. It makes it a major hype stock, and so you get buyers coming in. But really, what this is effectively as a short squeeze. I mean, it's an enormous, if you think of it in terms of that, of buyers leaving the market, but potentially that's what's happening. Is it's a fast move up, which is entirely unstable, and then we have an ensuing bear market after that. So this is one that gamblers, traders are looking to get on. And a lot of these electric vehicle stocks, they just die off. I can't remember the names of all of them, but we've had a few deaths in the electric vehicle market already. So they're highly dangerous. And as long as this continues down and down, eventually it becomes not a hype stock anymore. Traders lose interest in this. They eventually see that this is just a perpetual downtrend. Um, so what this needs to invigorate is another pump. And there's a reasonable chance of that pump will be another regressive bounce. But if it is, it could be enormous. I think we might be on the brink of it here. So I'll show you some of the aspects of the work here. We'll run through it together. So Wyckoff and Fibonacci go hand in hand together beautifully. Not many traders use these in combination. Fibonacci is used very commonly with Elliott wave. Most Elliott wavers, including top Elliott wavers that even write books such as Robert Prechter and others, I'm not convinced that they really have any clue where the market's going at all. Most people that use Elliott wave are not using it well at all, and some even don't even know what a log-based chart is, yet they use ratio tools such as Fibonacci. It's quite funny once you realise that point. But anyway, this Wyckoff market cycle is very useful with Fibonacci because the accumulation, there's a multitude of different ways to use Wyckoff with Fibonacci, but the accumulation and the distribution give us pivots, and those. All right, so slight distraction there. It's always the way when I'm making a video that the doorbell will go, so hopefully the microphone is picking up the audio okay. So yeah, so these accumulations and distributions, they give us pivots, and those pivots are very useful. So we have two Fibonacci price-based tools here, trend-based fib extension and fib retracement. Now, retracements are things getting smaller, so it's when we want to find the ratios of pivots which are within range of a wave. So this is actually not a very useful name for this tool because it's a very important extension tool. So I'm actually using this fib retracement tool for extensions. And so what I do here is I want to take the extremity pivots of a accumulation or distribution. In this case here, it's the extremity pivots of distribution. And so this area here this area here, this block, this trading range from these highs to these lows, that's a distribution. And we can see it's a distribution because we've got the markdown phase afterwards, which more commonly called a bear market. So now I take the 2 points of distribution. It's really important here that it doesn't matter what order the pivots arrive. What matters is that they are in extremity, and what matters is that it's a reverse extension. Reverse extension means that the pivots, you draw the pivots in the opposite direction to when using a trend-based fib extension. So I take the lowest pivot here and extend backwards. And I've already got this set here. This 2.272 ratio, it's very often is the ratio of a long distance trend completion. So there are many examples of this in the markets, which I'm not going to go through all of them now, but one that sticks out in my mind is Bitcoin. The first two market cycles, in a different context, that's in a bullish context, but in the first two market cycles, the bull market, Bitcoin, made a 2.272 retracement, taking the bear market pivots. Here we're taking the bull market pivots, so we're taking the top of a bull market down to the first extremity pivot, gives us our 2.272. So it's looked dangerous in this area for a while. I've been watching this one for a while. Had a few buys already in this area, and I just bought a little bit more today because this looks like it's going to pop. So this 2.272, it doesn't tell us anything other than that there's higher probability that a reversal might come in this area. But we need the price action to signal a reversal also, because any of these extensions, they're just stopping points for waves. They're points where a wave completes, but we don't know without doing other work whether the wave is going to complete and form a continuation pattern or complete and form a reversal, and that's up to us to work out. What is noticeable here is how much time it's spent in this area now, going all the way back a year now, back to April 2024. It actually touched into this golden window. This is what I call these bands, by the way. There are different similar terms for this, but I've got a series of ratios with overshoot ratios that I call golden windows. So the 2.414 is the overshoot ratio, and it's fairly approximate, but for this to be a capture, we don't want price to exceed the 2.414 by very much. In long range trends such as this, it can exceed a little bit. In shorter range trends, with shorter range golden windows, we would prefer to see less of this falling through here. But anyway, this first touch into this golden window back in January 2024, and so this is the first time in the trend where it's really held anywhere at all. It's just been a solid downtrend all this time. But it's had some scary phases here. We had the first move out of a 2.272, had a nice move up here, and it did look like that it might be the bull market underway. But sometimes accumulations, they can take their time, and sometimes these big pops can be effectively the same as this. It looks positive, but then it quickly collapses down, and that is what I would call a regressive bounce. These bounces are very dangerous. They cost you a lot of money if you don't see them. If you think that's bullish and you hold on, then obviously down and down it goes. And at this point here, when it collapses, it's entirely unproven as whether this will ever have a reversal. Maybe this is going to zero at that point, so that's why it's dangerous. But from this regressive bounce, this is, you can also call this a short squeeze rally. This is a fast pop. And these fast pops, like this one here as well, I would suggest, I mean, I'm not monitoring the flow, but I would suggest that's market participants leaving the market. And so what happens is the dominant force of the market, that is those with the most money, they start covering their shorts at the bottom. They start covering their shorts, and when they cover, that means they exit, they're taking profit. When they cover, by them exiting the market and exiting their short positions, starts pushing the price up. As the price gets pushed up, it then causes a forced liability, and that forces other lower order traders to then get out of their positions and exit or face losses. And so because these markets are going to be, again, I'm not watching specifically, but they're going to be bot driven, obviously. So this is all happening very fast. The dominant force, the bots with the most money, begin to cover their shorts, cover their shorts through this area. As they do, more bots pick up that this is a significant pivot forming, and they exit, and this forces the price up very fast. Yeah, and so then down the food chain, other traders will start to see this as bullish, and entirely non-technical traders will be throwing in large amounts of money up here, thinking this is a bull market. It is very difficult to spot this, even as a technical trader. Really, the way to spot this is when we see the upper wick forming. Once we see the upper wick forming and collapsing back down, that is our clue that it's not a bull trend, it's actually a regressive bounce, continuation pattern, short squeeze, whatever you want to call it. Sometimes these uptrends, if it is an uptrend, what will happen is you'll get a wick, and that wick be over exuberance. But what happens is it tends to hold. So when you get a high time frame candle like this, you'll get a wick up, and maybe you could consider that to be bearish. But what will happen is it will just hold the area where the candle body closed, and then who knows what can happen in a short time, but short term rather. But then moving on up. But it's when you get the wick and then collapsing back down that signals it is a regressive bounce, and that's why it's important to get into these moves early. Because if you get in early, then when it collapses down, it doesn't matter, you're just losing profit. But if you're knobby no nuts and you're buying up here because you've your newsfeed or whatever is telling you that Lucid is up however much it was at that point, it's up 200%, and you're dreaming that it's going to take over Tesla now, and you've got no technical awareness, and you buy up here, then you get wrecked. Yeah, so anyway, we had a first dip into this golden window area, and then we had this regressive bounce, and then some chop. There's no point in really describing what's happening here, but in the end, what it is, I would suggest, is now that it's holding this area, this looks like a three wave correction. And so the way I've drawn the three wave correction here might be slightly different to how your Elliott wave champion would draw the three wave correction. And the reason is because I've missed out this wave here. Yeah, so you'll have to get your Elliott wave champion here to tell me what the correct Elliott wave count is. I'm not really using Elliott wave here. I'm considering that, so Elliott wave is very useful in that it determines that corrections are often in three waves. So I'm not going to go into it too much. And contraction and expanding patterns are often five waves. But what I notice is that it doesn't really consider these regressive waves where it's a short squeeze rally, and perhaps maybe we'll stay away from the Elliott wave stuff and that. But this for me is not part of a three wave correction because this is a short squeeze. It's a short squeeze similar to this. Yeah. Some Elliott wavers are going to be annoyed with this if they watch this, but whatever. But anyway, I would count this as we've got the bearish trend into a selling climax, and then this first wave up is it's a recovery wave. It's where short covering is happening, and this is a phase where momentum is just starting to switch potentially. Market participants are leaving the market, but in this instance, unlike this one here, it's quite shallow, and we get this five wave pattern here before the next collapse down. What's important here, all of this stuff isn't really that important, but what is important here is, once you understand why I've taken the count from here, is that the third wave here, this wave, is impulsive. And I've seen this in quite a few different contexts now. I actually made a thread on Euro currency trade where something similar has happened in a different context, but this actually happens quite a lot. I haven't seen this in any textbook at all. certainly no Elliott wave book is talking about this impulsive third wave of a correction. As far as I'm aware, if any of you know where I can find out about this online, then you're welcome to tell me. I'd be interested to know. But what often happens, it seems, is that we get what I'd call an exhaustion wave. So three-wave correction, but not all the waves are equal. The first wave, which in Elliott wave you might call an A, or perhaps a W wave, depending on how you're counting your subwaves, which I don't really think works anyway. But W tends to be, or A tends to be equal in strength. If it's a short range correction like this, tends to be equal to the third wave. But here you can see that's not happening at all. Like what's happening is that we've got a wave down, we've got a recovery wave, and then effectively here, from this point here, we've got a selling climax of the volatility massively increasing. Yeah, and I don't have any awareness of any textbook which points that out. If I come down to lower time frame here, can see that this is a shakeout pattern. This is like a see you later pattern. This is a liquidity sweep. What is this is a fake move, right? This tells us when this happens and we get this whipsawing slightly higher here. Well, it's not actually a slightly higher, but we get this. There'll probably be some sort of moving average or whatever, some sort of liquidity point that it's tapping here that I'm not going to bother to try and find. But when we get this bearish whipsaw where we get a fast move up, suddenly, notice that the trend is kind of quite meandering, really, meandering trend, and then suddenly we get a whip up and then a fast move down. Yeah, when we get that whip up and we get that bearish candle, a shooting star candle, then it tells us that the volatility is increasing, and then as it moves back down here and becomes a bearish engulf, it is a shakeout pattern, and these shakeout patterns are a little see you later pattern that tends to happen before a significant move. So maybe many traders are aware of this. You guys might not be aware of this, perhaps, as you're watching this. Depends who you are. But this move down, this shake-up pattern happens very often before a massive wave down, right? So this is what happens at the end of a distribution, perhaps. Let's say you've got some sort of topping structure and it moves along, and then you get some sort of weak wave up, and you get a little pop, and then you get a smack down. Yeah. It happens in all different contexts and all different time frames. But when it happens, it means get ready. And it means that if you're on trade and you're long, you're likely to lose a lot of money quickly. Equally, you can trade this to the short side. Equally, you can see it. Perhaps not in this deep context with Lucid. It would probably not be a great idea to trade short in a trend which is down a bajillion % or whatever. But in this context here, so this is not tradable. That's not what I'm saying. But the point here is that having seen this fast whipsaw, this whipsaw indicates high momentum. Yeah, high momentum indicates that we've got potentially a more significant bearish wave starting. This is often what happens at the start of the next wave down. I need to remember when I make these videos just to unplug the doorbell and unplug the phone and that, because always getting calls and doorbell going and whatever. But anyway, when this happens, what is often signaling is that correction has come to an end, yeah, and we're into the next wave down, yeah. But this is a critical point here. This is the first point where, as manual traders, we have a little sip of coffee if we're aware of what's going on, and because this is high momentum, it's a high momentum shake-up pattern, but the key detail here is it makes no y-axis discovery. It's just a scare move. It's a fear test. It's a fake out. Yeah, and so this is an event which we might see before a massive capitulation, but now it hasn't happened. What it does is it builds cause for a move in the opposite direction because now traders are scared away, they've left their positions, but still this just remains in this golden window here. And this completes, as I'm losing my voice, this completes a three-wave correction, as I said, but this is a three-wave correction your textbooks didn't tell you about. It's a three-wave correction with a selling climax in it, a minor degree selling climax. Yeah. And so now we've had that, what we can do is we can look at what the ratio is of this third wave, and that will tell us more about the strength of this trend. All right, so from the high here, using the trend-based fib extension, so extremity pivot high, extremity pivot low, extremity pivot high. Yeah, you can see that if I just get rid of this for a second, we can see that it bottoms in this 0.618 to 0.786 area. So this is another of a golden window bands, as I call them. This one, when in the context of an extension ratio, is a weak ratio. And the reason why it's weak is because what it's telling us is that with a little bit of overshoot, this wave is 0.618 of this wave, right? So this wave is 1, and from that 1, this wave is 0.618 of that in ratio, yeah? So in a nutshell, it means that this wave is based in phi. 0.618 is a reciprocal of phi, so this is the number of balance. So that's the most balanced ratio that we can expect. But it's also smaller than the first wave, and so the fact that it's smaller is a sign of weakness. If it was a strong trend, we would expect this third wave to be equal to this wave or longer, but the fact that it's shorter is a little sign of weakness. So we've got multiple signs of weakness happening here. We've got this 1 to 0.618 golden window. We've got the fact that it's held this 2.272 golden window for so long, and the fact that it's had this whipsawing selling climax within this three-wave correction. Yeah, but it's gone nowhere. It's still just holding this area. Yeah, and so we can also look across to the NASDAQ. This is a really important thing to do because, of course, Lucid is part of the NASDAQ. We've been bullish in the group for a little while on NASDAQ now. Been bullish on Bitcoin for a while, making great profit in Bitcoin right now as I'm making this video. Meme coins are roaring right now, but that's not for this video. This video is on Lucid. But if you like this sort of content, then obviously that's my little plug here. Come and join the group. I've got loads of content like this all day, every day. So we had an enormous selling climax with NASDAQ. This, notice here, it's just as what I described with you of Lucid. This was a shakeout pattern. In the group, we went short here while Trump was talking. He was doing his little talk about the Trump tariffs. And as he was talking, the market was dumping. Yeah, I made this little shake-up pattern. That was a clue to get short. I was short all through this area here. Yeah. Worth noting as well that on the S&P, obviously the NASDAQ's not part of the S&P, but these are, the Lucid's not part of the S&P, but all things are connected. Yeah, and NASDAQ and S&P are very closely connected. So what happens a lot of the time is that for whatever reason, S&P is dominant with the ratios. And so you can see that this collapse was a 1 to 1.618 extension golden window. See that nice little capture there, the wick just dipping in below the 1.618. So that was our little clue that the bottom was in. This was a clue that the bottom was in for this wave, but it didn't tell us really is this the bottom of the market? Because that could be one wave, and that could lead to a recovery wave and then more downside, yeah, going down and down and down in that direction, yeah. But we had this relief rally here. It's all nonsense. What is important is what actually happens on the chart. What is going on with the news is fairly irrelevant, but the news events tend to be a catalyst for the technical movements, the chart movements rather. And in this instance here, we had the Trump pause. He's paused the tariffs, and there's some relief, and we had this relief rally here. And we can go back to the Nasdaq here. They're both the same, really. But just get rid of that. But this pump here, recovery bounce, that happened with the Trump pause of the tariffs, it's an enormous pop. Yeah, and then we had the Trump boast afterwards. He was boasting about like the incredible gains which had happened in the Nasdaq and stock markets in general, and that was a reasonable boast, to be fair, because what that did is it created this enormous bullish engulf. Yeah, so we've got enormous bullish engulf here, and high volatility bullish engulf, and these tend to happen at market lows, yeah, market bottoms. The volatility of a crash does not prove a market bottom, but this enormous recovery bounce that engulfs most of this capitulation after the Trump tariffs came into effect. And that's our clue that this is a market bottom. And since then, this is very chopped, but this is looking positive now. We might see some amount of downside here. It's currently making a slightly higher high. Slightly higher high is the liquidity point, high liquidity. So we might perhaps see a move down here. It might not. It could come up and then come back down here. But likely in the end, this is going to be a free wave continuation pattern of one sort or another, and we're moving up. So that's a market bottom. And so this isn't a great time for Lucid to make its move. Yeah, because the markets are just turning positive. Yeah. We can look at the RSI as well briefly. Yeah, so worth noting here that the RSI is a very trappy and deceptive tool. A lot of traders use it and have enormous belief in it, and I don't really. But it is worth noting, though, that it is climbing here. The RSI is moving up, and when it starts settling around the midpoint, which it seems to be doing here, when it starts settling around the midpoint, but we've had no significant bullish action. This is all all of this action is all very contained. There's no real breakout at all. Yeah, but the RSI has been slowly rising. This is what tends to happen, though. It slowly rises from the point of a selling climax. The point of a selling climax was here, and the RSI will rise. This doesn't tell us specifically if this is going to break out or not, but it does tend to be that when this starts settling around the midpoint on the week chart, yeah, and nothing bullish has happened, that tends to be the area that it hovers around before a pop. And you can see we're just below that now. So maybe it might be a few more days or weeks, or perhaps this might take before it pops. But yeah, that's my technical work through of why this is potentially on the brink of popping. And if it does, what the difference is here is that previous areas is this bounce was just like a quick short covering rally, really. It was an enormous pop. Yeah, but this is an accumulation, right? Potentially, if it breaks out, this is an accumulation, right? Which means it can go much higher than this and make enormous profit. Yeah, and so I'll be looking down the road. If it does pop, where to take profit on this? It might be very fast and frantic, and it might have a very fast whipsawing top. This doesn't guarantee a bull market at all, but it could be. I mean, it could be a bull market. That would be great, but it could just be an enormous one of these again. Yeah, and then falling back down. And I haven't drawn this specifically. I've just drawn it randomly. I'm not saying where it's going to top exactly. Have to do the work down the road. if it breaks out, but to determine that, yeah. But yeah, this looks set to break out. I should probably draw a little arrow here to make it look nice for when I make the video. Yeah, how big should we make the arrow? I'll put it about there. But yeah, if you like this sort of content, I'm doing this sort of thing, these type of videos, pretty much all week in my group, and that spending all day working on these charts every day. So if you like this sort of content, yeah, you're welcome to join. If you like, just hit me up. All the details are in my signature, and in my and on my profile page as well. Yeah, so it looks like this is going to pop. We'll see if I'm right or not. All right, thanks guys, bye.